Tell me about it.
Sure. It's called TV Azteca. It's the second largest broadcaster in Mexico. They've got about a 30% market share, which is a market share they've maintained for about 20 years now. And it's also the second largest producer of Spanish language programming in general in the world. So it's a significant company in the Spanish language field. The company's stock price has been down over the last 9 months or so because they've had a couple of bad quarters, and they're going through a bit of a kind of a market share loss to the largest player in the field, which is Televisa. But we think this is transitory, and we think this is something they're likely to bounce back from. So the stock is trading at around 7 pesos a share, which is about 55 cents US. We think fair value should be about 10 pesos a share, which would be about a 40% gain from here.
And they have the rights to the World Cup, you mentioned.
Well, they share the rights with Televisa, but it's a significant thing for them because, you know, in Latin America, there's a very big soccer base. They call it football there, but this always drives. If you look back in history for the last 20 years, every time there's a World Cup, which is every 4 years, ad sales in Mexico are up. There's not been a single year where that hasn't happened. So it's kind of a nice thing to have in the background that we know this is coming in 2014.
Another stock you like, very different business, it's a Japanese company. Which one is that?
Sure. It's called CMIC, and CMIC is the largest, what are known as CROs, Contract Research Organization in Japan. And this is a business of providing services, outsourced services to pharmaceutical companies. So it's a trend that's been going on now for about 20 years where pharmaceutical companies are increasingly outsourcing their R&D, their clinical trials, to companies like CMIC. CMIC was the first to do this in Japan. They're the largest now in the field. And the stock is down dramatically in the last 6 months or so because, again, a couple of bad quarters. But we don't think a couple of bad quarters necessarily undoes 20 years of great track record. This business has grown for 20 years at about 26% a year top line. So the fact that it started to shrink a little bit in the last couple of years doesn't necessarily mean that it's going to zero. So we think there's a lot of upside, about 80% upside.